Welcome back to the Brent Bruce Daily. Today is Monday, August 15th. It is now 2:47 p.m. Central Time. Let's take a look at what's going on, where our home loan interest rates are, and a little bit about what we think we're going to see here in the coming days throughout this week. So, just a quick article here that I always like to point out. This here talking about stores and suppliers are clashing over price hikes as shoppers are hit by sticker shock. Now, we all know exactly what they're talking about, right? I mean, I believe that I saw that eggs have gone up 30% year over year. There are some crazy increases, and inflation is rampant right now. And when we're seeing these numbers coming out, that we are applauding the fact that inflation is subsiding. Just remember, it is subsiding, it isn't gone. Okay. So 8.5% inflation on the CPI is outrageous inflation. Keep that in mind. But I'm glad to see that it's coming down, because we need to see prices stabilize and maybe come down a little bit on some of these products. Otherwise, we're going to continue the inflation spiral. And if you don't know what inflation spiral is, take a minute, look at my YouTube page and look up the inflation spiral article or video, and you will learn a little bit about what inflation spiral is and what we need to watch out for, which I see a little bit of that happening right here. So where are we as far as our home loan interest rates at this point? Now, if you remember on Friday, we were talking about our interest rate being at 4.99% with a very small credit. And we were talking about, are we going to end up having a good week here where our home loan interest rates improve quite a bit, because there's a lot of room for that? Or are we going to see our gains go away and kick up into the fives, which is not where we want to be on the Brent Bruce Daily? Today we're up 8, which is good. That's a good thing, but pretty flat, right? That's not a lot of activity. And over here, this is the 25-day moving average, the line that kind of moves around that I talked about on Friday, as well as our Fibonacci level, which is this red line and is horizontal and is static. So this number here is not moving, but this number is creeping up higher to where they are converging. And we talked about that our home loan interest rate charts, our mortgage-backed security charts, are going to have to break out. They're going to break either up, which is good. Remember, these are inverse charts. So if this goes up, interest rates go down. And if this goes down, interest rates go up. Keep that in mind. Now, look where we are. Look at this traffic jam. This is just a real jam of all of these different Fibonacci levels and moving averages. So look what's going to happen when we break one way or the other. Look at all this space, one way or the other, right? So there is a recipe for some real volatility pretty soon. Now, we are hoping that the volatility is going to be with this moving up a lot higher, giving us much lower home loan interest rates than we had the last couple of weeks. I think, based on the reports that have been coming out so far and seeing multiple reports talking about inflation subsiding, that we should see home loan interest rates benefit from that. And we should break above the Fibonacci level, above the 100-day moving average, and bang up against and test this Fibonacci level, which is quite a bit higher. And remember that when we were in this range last time, we were talking about a 4.625% interest rate on the Brent Bruce Daily scenario. So that is what I would really like to see, the mid fours again. And then we get to see if we're going to, get into the low fours up in this range here. All right. So let's take a look and see where we are right now. Let's jump over to our Loan Sifter tool, which is where we run the Brent Bruce Daily, which is, once again, a very well qualified 30-year fixed conventional home loan, single family residence, 800 FICO score, just the unicorn client, as we say. Not going to get much better. 25% down. Remember, we were at 4.999 on Friday, and where are we? 4.999. Okay, so we have had a beneficial day, right? We are up 8 basis points. Things are looking good in general for the mortgage-backed security market. So what happened to our rate? Remember, the rate itself did not change, but the credit did. If you remember, we were somewhere around, I believe it was right about 270 on our lender credit on this scenario on Friday. So we have had a beneficial day. It's just reflecting in the credit rather than in the interest rate. Now, if we open this up here, United Wholesale continues to be our leading lender that we will use with our clients. For $731, we're at 4.875. So we're getting closer to that 4.875. And really, like we talked about, we want to see that 4.625, maybe even the 4.5, hopefully by the end of the week. So if it were me, I would probably be hanging out to see what happens here in the next couple of days to see which way we're going to break out. But if we start seeing it break out down, which means home loan interest rates going up, I would be moving very quickly to lock in the rates that we have. All right. That's what's going on. Let's see how it plays out. I'll get back with you tomorrow. Have a great day.